Hello friends, warm greetings once again on behalf of Navemar Foundation. Continuing with our series of our weekly podcasts, this week we would like to address a specific issue related to our NRI clients. Many of our NRI clients keep asking this question: when I do my redemptions from my NRE account, how will I be taxed? What is the difference between TDS as well as long-term capital gains? Will I be charged both? If I invest in my wife's name, who is a resident Indian, is it better than investing it in my name? These are the many questions that we have been receiving from our NRI clients quite often these days. So to counteract this, or to just explain how this works and makes the things much easier, I would like to explain it in the form of an illustration as far as the equity funds taxation is concerned. Now just imagine an NRI client invests say 20 lakh rupees about 5 years ago, and this portfolio has grown to now 50 lakhs. And this client decides to do a redemption of 20 lakhs of rupees from his mutual fund portfolio for his needs. The moment he does his redemption, as an NRE, automatically a TDS of 10% will be charged on his capital gains. Now let's imagine his capital gains is total 5 lakhs. Out of this 20 lakhs, 5 lakhs is his capital gains. So automatically 10% TDS on 5 lakhs is equal to 50,000, and this 50,000 will be deducted, and what he gets into his account is 19 lakhs 50,000. Afterwards, when he files his returns, now if he files his returns, it's well and good. So when he files his returns, his capital gain calculation again will show it as 5 lakhs, and on this 5 lakhs there is an exemption of 1 lakh rupees. So his capital gains to be paid and taxable is 4 lakh rupees, on which he needs to pay a tax of 40,000 rupees. But as his TDS was deducted of 50,000, he is eligible for a refund of 10,000 rupees on this redemption. So actually speaking, for NRE clients, the taxation is much easier as compared to the locals or the resident clients. Now why I say that is because in resident clients, the moment he does a redemption, and if he doesn't pay the capital gains, which is to be paid at the end of the financial year or while filing returns, for a delay of every month, there is 1% interest charged on it. So he has to remember to file his returns on time. Whereas for NRE clients, the tax is deducted on the spot, so he doesn't have to remember when to file it. He can file returns anytime he wants. And the better when he returns, the refund money will come back into his account as a refund of the tax difference that he has paid. So my dear friends, as far as equity taxation, the taxation limits are much better as far as NRE clients are concerned as compared to the resident clients. Now let's take the debt funds into consideration. Now just imagine an NRE invests in a liquid fund, say approximately around 5 lakh rupees, and after 2 years he decides to redeem it. And the capital gains on it is that 5 lakhs has become 6 lakh rupees within a period of 2 years. So his short-term capital gains becomes 1 lakh rupees. On 1 lakh rupees, there is a 30% TDS been cut at the time of redemption. So in case any redemptions is done in less than 3 years, it is short-term capital gains which is deducted at source for the NREs. Now if he exceeds over 3 years, then it's basically bent or 20% based on indexation. So he gets this benefit of indexation if he keeps money in the debt funds for more than 3 years. Now coming to resident Indians. As far as resident Indians, the taxation on debt funds is basically whatever the gains you make is added to your taxable income. So under whatever slab you fall, whether you're in the 10%, 20% or 30% bracket, this taxable income will get added to your salary or whatever the income is shown on your income tax returns, and based on that slab, the taxation will be applicable. So my dear friends, as far as NREs are concerned, you have a lot of benefit of investing in India. Be it equity funds or be it debt funds, the opportunity is huge. And as India grows, the best time to invest is in Indian equity markets. So all the very best, and I hope my information would help you a lot. Thank you.